Hey everybody, Jim Malone here, coming to you live on Dallas Trading Floor. It's Wednesday, and the market has bounced back a little bit. Apple moved back up; it sort of did a dead cat bounce, but I'm not convinced. I still think that we're moving. We're moving from. Well, let's see if I can get the camera back here. There we go. I still think we're moving. I still think we're moving back to a market that is, basically, it's still kind of moving from the techs that we all love so much, the growth stocks, to sort of a different thing. And what I did, for the people on the for people on the Discord service, just put up I think a pretty nice bear put spread on Peloton. They I don't know if you realize this, but they announced that we're going to recall practically all of their machines, and the stock has just taken a swan dive. Hopefully I entered this correctly, but basically, I've been basically buying the 85 May 21st puts, and then selling the 75s basically to cover part of it. So hopefully that'll work out. But I think Peloton is going to be announcing earnings tomorrow. They probably will do pretty well on the earnings, but they're probably going to get a sell-off, because they're getting sell-off today, but it probably will bounce a little bit. But I think that they're going to have to put up a lot of reserves against this, so they're still not profitable. So and their stock has not been doing as well as it had been doing. So it's so that's the reason for the bear put spread. I'll kind of give you a little look-see in terms of kind of how the chart for them looks. Basically on the announcement today, it kind of went south on them. They're down about $14 a share, about 14%. But their earnings are in one day, so we'll see kind of what happens. There's a little egg here that means that there's intense selling going on. The amount of selling is the volume is 8.5 times what it normally is. So I don't expect this one to recover, and hopefully, if this put is done correctly, it will hopefully be in the black. So we'll see about that. How it trades. Just kind of wanted to go over some of the other charts here. We did see some recovery in the Nasdaq Composite, and I kind of want to show you that we sort of have a bounce. It's still pretty weak. We did bounce up here. We kind of went right down to the 50-day moving average, and we bounced up. But I think this is a dead cat bounce, to be honest with you. I don't think that changes the trend. I think the trend, unfortunately, at least for right now, the Nasdaq, I think it's downward, and we're still the market is still in an uptrend under pressure. So I think it's a good idea to possibly kind of look at your positions. I'm about 50% in cash right now. I do have some open positions. I was doing a little buying this morning, but mainly in the oil stocks. I bought a small position in an oil stock this morning. Let me show you. I'm in Matador, MTDR. That's doing fairly well. Yeah, it's up today significantly, as you can see. There's just a shift going on from the techs into the sort of the old economy stocks, like the oil. So I've been really looking at this area, the U.S. oil and gas exploration. I kind of want to show you this. This is sort of where I'm looking to shift some of my some of my funds right now is into the U.S. Oil and gas. And if you look at all the way at the top, this is the ranking here. I'm going to sort them by rank. But as you can see, oops, that's backwards. Yeah, there we go. So the rank is number 2 in terms of a group. So I'm going to just show you kind of how the group is doing overall. Whereas the techs, and they're pulling back, the movement in the U.S. oil and gas exploration has been up. 99 is the relative strength rating. As you can see, this relative strength line here is moving up to new highs. So this is a very good sign. It's basically, basically moving up to the highs. So there's a lot of investment in this particular area. I also did I also did purchase a position in Pioneer Natural Resources today, and it's up as well. As you can see, it's right below buy point here. The buy point is 169. So this might be, you might want to consider this one. It's got an 85 relative strength, and again, a very strong relative strength line. This is the blue line here. What I'm doing here is I'm drawing a line across so you can see where the top of this is, and you can see it's moving towards all-time high relative strength against the S&P 500. So that's just kind of, sort of FYI, something out there that might be, might work for you. It might work for you. So, without further ado, let's take a look and kind of see. Your thoughts on Palantir earnings on Monday? I think you want to be out of Palantir right now. It's just I think it's sort of dead money right now. This is the chart that this is the chart that I have on Palantir. As you can see here, it's just not a chart that you want to buy. As you can see, and this is sort of how I evaluate charts. When I take a look at a chart, I was very excited with Palantir, and I was in it basically as it was moving up here. But then when it faltered, I was out at 7%, and then I haven't been back in. You just don't want to buy a chart like this. It's got a downward trend. That's not where you want to be. If you're more than 7% down on this one, really consider going to something else. The reason I'm moving my investments into the oil and gas area is because that has been performing very well. A stock that you might want to look at, I don't necessarily have a buy point on it, is Denbury Resources. See how different this chart is? This chart is going from low to high. That's really what you want to see here. This is a very good stock. This is in, at least for right now, this is in the oil and gas U.S. exploration. That's the second best sector group. So I think you've got to be really careful with, I'm afraid you've got to be careful with Palantir. Okay, I got a couple for you, X, C, and B. X is, that's U.S. Steel. So let's take a look at U.S. Steel. The Steel Group has been performing fairly well. It's group number 12 out of 197. So let's kind of take a look at U.S. Steel X. We've pulled back right. We're right back in the buy zone, down a little bit today, but there's a buy point on X at 24.46. So that's the buy point. Now, I'm going to draw a line on the relative strength line. As you can see, we're almost at the top, but we have a downward pointing relative strength line. So today, obviously, that's showing that it's moving down. But this is a good sector. They blew out earnings, 246 up 246% quarter over quarter. So they're looking at their stats, it's very good. They've turned the corner, and now they're positive. So you can definitely. This is one you could probably definitely buy. This isn't going to be a superstar. You're probably not going to get a double or a triple bagger out of this one, but it's going to be pretty good. I mean, it's going to be pretty good. I think the oils. Everyone hates the oils, but the charts don't lie. What's happening is that many of the big funds that were in a lot of the techs, they're basically selling them and they're moving into this area. That's just been the way it's sort of been moving. So the metals are good, the miners are good, the oils are good, and the metals are good right now. So the one you might want to look at also is Rio Tinto. This is another one that I bought this morning. Symbol RIO. Rio Tinto. And that's also a very strong group. It's 21 out of 197. Just to give you a kind of an idea of sort of what I've been waiting kind of to come back into the market and, to see, if I could be back in the market. And so my small portfolio has changed a little bit. Something with calculations. Oh, okay. Maybe something is wrong with my calculations. I don't know. See how that's working out. But that's with the spread on Peloton that I put on right before the show. But let me show you the kind of how it's looking on my small portfolio. And these are some of what I do is I take pilot positions in these to kind of see how they're trading. So with this one, let's kind of show you ones that I did go into this morning. So hopefully we'll come, okay, it's waiting. There we go. And hopefully we're going to get, yeah, okay, there we go. And we're loading again. Okay. So let me share that screen with you. And there we go. So let me get kind of give you a view of what I moved into today. Now remember, the market is still under pressure, so you got to be really careful. I mean, I'm still very heavily in cash, as you can see. I've got about 35 in this portfolio. I have 35% in cash. I'm basically, the two buys that I made today were Rio Tinto and Pioneer Natural Resources, and Rio Tinto's up. Pioneer is about even. It's about flat. And then I bought Matador. This is another oil company, and then this one, Merrimax HZO, and that is a boat company. They're doing very, very well. All these are in the last week, as you can see, in terms of the days. So that's kind of I wanted to kind of give you a look-see on that. Kind of where I'm going with the actual trades that I'm making in terms of actual shares. Mostly I'm doing spreads right now just to protect my my position. So that's kind of it. So let's take a look, Levi, again at SEE. See kind of what's going on there. Sealed Air, and this company has been around a long time. I remember this from really when I was much younger, and it's always been a favorite. It's always had a really good. They make those little pop things. The popcorn things that you get for wrapping, and it's an interesting company. I mean, they've done extremely well. It gapped up today, basically on earnings. I can't really understand why, but it's in an area that people are seem to be moving into. Containers and packaging. It's a little bit low. It's 127 out of 197. I don't quite know why it's moved up like that, but it did have a nice profitable quarter, and it did have some very nice sales increases. But a lot of funds are in this. 1,117 funds are in this one, and it's 63% owned by funds. So, the RS line is pointing up. I can't really see why, in particular, it moved up so much today. They must have had some good news. I'm just kind of looking here to see. I'm just kind of looking here to see kind of what the situation is here. Checklist is 55, and okay. Let me just kind of check something here to see if I am. I'm going to check my Discord room here. Just going to for everyone out there that let's see. I think something. Okay. Okay. I think something wrong with calculations for bear spread on Peloton. Okay, let's see if I can look at this really quickly. Okay, so sell to open and buy to open. That's right. No, that should be correct. No, that looks good, by the way, Z. That looks good. Let me get back to you. Okay, no, that looks correct. Sell to open, buy to open. Okay, you're buying the upper and you're selling the lower. That's a bearish trade. So let me get back to you on that one after after I get through with the broadcast, and I'll definitely get right back to you on that one. All right. So, do you like Gush? This is from Kate. You know, Gush is an interesting one. It's a 2x. It's a leveraged ETF um, for the oil and gas sector, and you know, I played this one a little bit last year. Not I haven't really been in it this one. It's kind of flat. This is sort of the chart for Gush, basically, Kate. And as you can see, it's still kind of flat. It's up strongly today though, $3.71. I mean, I definitely think this is the kind of thing that you could possibly you know, you could possibly look to because I do think this sector is seeing a lot of activity. It did have a little bit of a pullback. This is on the weekly chart, but it looks like it's moving up again. So it's you know it's up 11%. Gush is up 11% on the week. So you know, I definitely think that this is not a bad place to be. Now, one thing you got to be careful of is this is a 2x bull, so it tends to be it tends to move, you know, twice the underlying. So, you know, if it pulls back, it's going to pull back just as hard. But I do think at least in the next probably month or two, I mean, with inflation coming, and that basically is what they're signaling. With inflation coming, I think we're going to see, you know, we're just going to see a lot more price of, you know, we're going to see the price of oil just move, you know, move higher. I mean, you know, that's just basically, you know, that's just basically it. So this should benefit from that swing. So, all right, so let's look at Berk. No, this is another, you know, this is a really good if you're looking for kind of a place to park money right now, and this is a really tough market to trade right now, because on the one hand, we're under pressure, the market trend is under pressure, and on the other hand, you know, it's not a full retreat. So it's just a lot of repositioning. People are selling their techs, they're taking their profits, they're moving it sort of into the hard goods, as it were, you know, like oil. But Berkshire Hathaway, it is a good, you know, is a good stock. And I was actually thinking about this for myself. BER, BERB. I think it's BERB. Yeah, there we go. Berkshire Hathaway B. Is that right? No. BERB. Yeah. No, BRKB. Sorry. Let's see. BRKB. There's the A shares too, but they rarely trade. It's up nicely today. Yeah, this is definitely, you know, this is another good place. Um, they're going to do well. They're announcing they're going to do a buyback. So you know, this could be very good. Now here's the issue with Berkshire. There's no options on Berkshire. It's just the straight stock. So you can't do anything like covered calls or anything like that. But you know, this is a tremendous company, and you know, again, they're huge, and yet they're still going up. So you've got 27% increase in profits, 5% increase in sales. This is really stellar because of the size of this company. A lot of other funds though own it, 31% own it. So I like this. My only concern with Berkshire right now is this RS rating of 68. 69. I like to see at least 80. But in this market, you know, we have, you know, it's coming off this base. You know, normally I wouldn't buy it here. I would try to buy it. You know, I probably would have tried to buy it about 230, but you know, I don't think you're going to get it for that. So let me just see kind of what the monthly, you know, what the monthly chart overall is looking like. Yeah, this is still just a great stock, and it's kind of trading in a range right now from about 282 to 284. So, you know, I think this is going to trade well, even in a bad market, because they're in the very much of the infrastructure type of thing. So let's look. So yeah, I would definitely greenlight Berkshire Hathaway. I really think it's a good stock. Let's look at Matador. I'm actually in Matador, MTDR. It's looking pretty good today. I started this move into, you know, trying to find, you know, a place to go in the oils. Now, here's the thing about the oils: they all kind of trade the same because, you know, they're basically it's the same product. You know, it's crude oil, but I like this chart right now. This is my buy stop limit here, right at 27.43. I bought it, basically as it moved above that. Now it moved above that, and then it pulled back, and then it looks like to now it may have cleared this. I wouldn't buy it too much above here, because you see, you're buying it extended, and that's the thing. But it's still buyable now, probably, maybe today or tomorrow. The earnings were very, very good, obviously, because the price of oil has gone up. That's the main reason. But still, and we have to be careful about this, their overall sales were down, but their profits were up. So I do think that, now that oil is selling for over $60 a barrel, we're going to see these oil companies do well, and that's really shown by this U.S. oil and gas exploration and production sector. It's 2 out of 197. The only sector that's doing better than this currently is the royalty trust, which is basically just the oil in the ground, and it's just getting the checks. It would be nice. I would like to be in that position myself. All right, great. Thanks, Samuel. Appreciate it. OEG. Let's look at OEG real quick and see what we've got here. OEG and Orbital. Yeah, this is another really good one, by the way. It's in Houston. This is primarily, yeah. There's a number of them in this one. Is this in the, no? Okay, this is in the alternative other. Orbital. This is good. This is a good group, but I would recommend you possibly taking a look at a different group. And I kind of want to look at this one as well. Let's kind of take a look at these oil groups again here. I'm gonna do, this is the one I really want to kind of focus on, and this is what I've been focusing on for a while, is the industry group, the number 2 one. It's the oil and gas U.S. exploration group. This is the group that I really have been focusing on, and I'm trying to find the leaders in this particular group. And what I've been able to do, look at the top stocks right now in this group. The number 1 is Denbury, number 2 is Matador, and then number 3 is Bonanza Creek. Now, Diamondback Energy just announced, and they didn't do well, so I kind of want to look at Bonanza to see if there's anything there. This is another one you might want to look at. Again, I'm not recommending it, but this is looking like a very good chart, and it's in the buy zone right now. And that is Bonanza Energy. It's called Bonanza Creek Energy. BCE is the symbol for this one. BCE, Bonanza Creek Energy. What I'm looking at really when I'm looking at the oils, I'm looking at their debt load. This doesn't show any debt, but who knows? But I do like the fact that again, there's been a positive increase in sales, but they're down in terms of profit. So they're probably acquiring more land at this point. So probably wouldn't do Bonanza Creek. But let's look at Matador, MTDR. Now this company went bankrupt and it would reorganize, and sometimes when that happens, that can be a very, very good thing. Just looking at the debt. Okay, so Matador has significant debt, 141. I'm actually in Matador. It's got a very good chart pattern. The other one that I really like is Denbury Resources. This one also went bankrupt and reorganized, but they got rid of all of their debt. See, the one I like about Denbury is that they only have 7% debt. Why? Well, the reason is because they went bankrupt and they reorganized. This one is probably, and unfortunately, I was in this one. I was pushed out of this one. They've got earnings in one day. I wouldn't buy them today, but I want to see how Denbury does on earnings tomorrow. This one may be a buy on Friday. I don't know, but it's looking very, very good. In terms of the weekly chart, unfortunately, there isn't really a pattern to buy it off of. But that's kind of where I would recommend looking instead of the one that you recommended, just because that's kind of a so OEG. Maybe take a look at Denbury versus DAN. You might want to take a look at that one. Thanks, Samuel. This is Space. This is Virgin Galactic. I haven't been in Virgin for a while. Um, Before I was in it, but they had a blow. It had a blow off top, and I haven't really been back since. I sold right before earnings on this one. Earnings are in 5 days. Here's the thing: we have a downward trend on Virgin Galactic. Wouldn't be a buyer at this point. Just wouldn't be a buyer because we have this downward trend, and we're trading below that 200-day line. So I just wouldn't be a buyer on this one right now. I like the idea of the company. I think they're going to do very well, but I think for right now, I think you got to be kind of careful. It's only got a relative strength of 7. As you can see, the relative strength line has been way up here, and now it's way down there. So the relative strength line is moving down as well. So I think you have to avoid. I would avoid. I would avoid Virgin. I really would. All right. Well, thank you. Let's see. Let's see. I've been. Let's see. Questions from TikTok. Should I sell my Ethereum? Well, here's the thing. I'm not. I'm not an expert on crypto. I will tell you that straight out. The only way I've been really trading crypto is in GBTC, which is the Grayscale Bitcoin Trust. But hey, what I would do is keep on pushing up your stop loss if you can do that. I don't know if you can do that on Ethereum, but I would, one of the things though is if these pull back, they're likely to pull back hard. So protect your profits. Try to sell. Try not to take any more than a 7% loss. But I don't see anything bad about being in it at all. Oil recovery, absolutely. Well, here's the reason the oil stocks are doing so well. It's not because everybody woke up and said, "Hey, I love oil," but basically last year it was like there was a glut of oil, and things have changed. I mean, basically what they did is that they cut off the XL pipeline. They made it difficult for to drill, so that dried up the supply, and that's going to force gas prices higher, and because of that, the oil companies are doing well, especially the domestic ones that have drilling acreage in the Permian Basin. And what's happening is Chevron is coming in to the Permian, and they're buying a lot of these oil leases from these smaller companies, and they're drilling. And so oil was oil went below $20 a barrel last year. Now it's over 60. And really, at $65 a barrel, it becomes very profitable. So, you're getting these companies that reorganize, like Denbury Resources, and they're not carrying a lot of debt on their books, and so they're doing well. I mean, that's just a fact. I mean, it's just a fact. Sorry, I might be off topic. SPY calls or puts. Wow, here's the thing on that. Good question. I'm actually a little bit bearish actually right now, and it looks as if the spider is off a little bit after hours. But I probably wouldn't be doing either right now. I just I do think that at least in the next week or so, it looks like the spider is in somewhat of a downtrend. It looks like it's going to come back down to about 400. It's currently at 415, and so I do think you could play that. At least for maybe a week or two. It's coming down to 400, but if it reverses higher, so I really couldn't advise you on that. Puts or calls on that. I couldn't really advise you on that. Right now, most of my trades, my bears trades, especially the bear put trades, are based on earnings and potential earnings problems. I do have a bear put spread on Beyond Meat. Let's kind of pull that one up, and let's see how that's doing. That was this morning. It was in the red. I mean, it was positive. BYND. So let's look at Beyond. Yeah, and it looks like Beyond. Just going to show you Beyond Meat here. Yeah, it's looking like it's got earnings tomorrow, and it's continuing to trade lower. It did sort of have a little bit of a bounce, but it looks like it's on its way lower. I do think that this is going to see some It looks like it traded up right to the end of the day, but I do think that we're going to see this one probably move lower into earnings. I want to take a look also at Datadog, DDOG. That's I now have a bear spread on that one too. It looks like that one is down as well. Oops, I have to turn on my camera once again. I'm having some issues with this camera. Oops, there we go. I don't know why. Sometimes it cuts out. It gets confused. It looks as if. Okay, so yeah, if this looks like if this falls more, of course, I will be in the black as long as it's below 75. So we're about $1 away for making money there. So that's looking fairly good. We'll see how it comes out. Does Popeyes have a stock? I'm hungry. I've eaten way too much Popeyes in my life. I do like it though. Oops. Let's see if I can get. Let's see. I've got my camera back here. Golly, I don't know why it's just doing that. Yeah, I'm losing my. Let's see if I can get that camera back. Well, it doesn't look like it. Oh, okay, there we go. We're back again. I don't know if it does. I think it probably might. It might. It might have a stock. I'm not sure. That's a good question. I'm not sure about Popeyes. Let's see if I can figure it out. Let's see if Popeyes does. Yes, it does. PLKI. Interesting. So let's bring it up. PLKI. It does have one. PLKI. And that is the symbol. Oh, I thought I had it. Did I PLKI. All right. Let's see. Did I put it in there right? PLKI. If Popeyes pops up. Well, it doesn't pop up. So I don't know. I don't know if Popeyes has one. Thoughts on Square? I had to end my trade on Square. It just wasn't. It's probably today. It's moving right. Yeah, it's up today, but just barely. I don't know. It just overall, I have been. I've become a little bit more bearish on this market. Square's a good stock, but it just seems like it's in a downward trend right now. And the thing about it is that this area, the finance credit card payment processors, is it's the group rank is 148 out of 197. So there's definitely movement away from this sector, even though it's a great company. It's just that it is in a little bit of a downward trend right now. I wouldn't be a buyer on Square again. I had a bull spread on it, but I just closed it early because I didn't like the action on it. It wasn't able to break out above the 283 level, so I basically sold it because it just couldn't make it, and then it started pulling back. So I think this may go lower. It looks like it's lost support at the 50-day line. So I'd be real careful on this one. It's got earnings in one day. Let's see how it plays through earnings. That's the key. Let's see how it moves through earnings, but I would be very careful right now on this Square. It's been a good stock. It's a good company. It's just, the movement of the funds is away from this area. It's into basically the miners and that kind of thing. I want to show you another stock that I did buy today, and it's been on my watch list for a long time. It's called Rio Tinto, and it's a mining company. Yeah, here it is, and it did very well today. As you can see, it moved right up to the buy point, and the buy point is 86.73. So it moved right up to there, and it out of a cup with handle consolidation. So this probably is going to go higher based on the volume that I'm seeing here. It's increasing volume, increasing price. This is where the money's moving into the market. This metal mining and ores area. This is the out of 197 sectors. This is the 21st best. This has been improving. This is the area to look for potential companies to invest in, because I'm pulling back up the list here, but if we look here at 21, that's the metal mining and ores. Last and kind of look at this area in general. Basically it has improved significantly. It's up 27% year to date, the group, and this is by far better than anything that you're seeing in the other areas. So, this is why, this area is doing so well. And the reason I'm in, it's got a relative strength again of 89. So this particular area, it just seems like, the companies are looking at it hard. Now, I bought it with a relative strength of 79, which is a little bit lower than I normally do. Rio Tinto, I think, though, is the leader in this group. So it's just one of those. It's one of those things. We also have another very strong stock in here that I've owned, Freeport-McMoRan FCX. So these are really the percent off. Right now, Rio Tinto is trading almost only 1.7% off of its all-time high. So that's something to look at in terms of a sector, in terms of something that you could possibly move into if you're not getting the performance that you want out of some of the other areas, like the tech area, especially like the computer software enterprise group, which has been tremendous. That's where Salesforce is and a lot of other companies like that. It's just not doing that well. What is happening is a lot of the large funds are selling those, and then they're moving into sort of more the hard asset type areas. So that's kind of where it is. Should I get out of parts down 6%? I would. PRTS in this market, you can't be that forgiving. You just if it's it just depends on where you bought it, though. Remember, this is if you're 7% down from where you bought it, not when it did today, but if you're 7% down from where you bought it, that's where you want to probably start thinking about cutting your losses. If let's say you bought it, and let's say you bought parts back a few months ago, and let's say you got in at maybe $9.40 and it's $16 now. Well, obviously you don't want to sell it because it's not down 7%, even if it's moved down. Right now, it looks as if parts is. It seems like it's getting some support at the 21-day line. This is not bad, considering everything. The only thing is the retail wholesale parts group is not as good as it was, but it's got earnings in 5 days. I mean, if you're not down 7%, I would probably consider holding it. It's still got a strong relative strength line. It's a little bit off of it. This is the relative strength line that I'm talking about. So the distance between there and there, you can see that it's moved down. It was stronger against the market, and now it's a little bit weaker against the market. But you might want to look at an area that is doing a little bit better than this area, and that's one of the reasons I'm trying to highlight some of the kind of the basic materials companies like the like the miners and the oils. Now there is another area that has seen a lot of very good movement into, and I'm into one of these stocks as well. It's the construction, and GVA is Granite Construction, and that's going to, if the infrastructure program succeeds in Congress, this is likely to be a beneficiary. This one is up 1.81%, or about 4% today. This is a very strong stock. I think you might want to put it on your watch list. And I do think you could possibly buy it here. I probably wouldn't. I'd probably prefer to see it move a little bit higher, but I think it's still viable at this point. As you can see, this blue line, this is the relative strength line. It is definitely moving in the right direction. And it has, they just, it looks like they've got, I guess they've got, they've got earnings in, I don't know how many days. They think they pre-announced that they're up 7% sales, down a little bit in terms of the profit, but this is the kind of area, this is the kind of stock that you want to look at right now. This is the kind of area because these will benefit. Again, I'm not in Granite, but I'm in another one called Fluor, FLR. That's another construction company, and it's done quite well for me. It's right below a buy point. I started accumulating it as we started to see that the building heavy construction group starting to get better. That's when I looked to the leaders to move into them. So this is another one that you might want to put on your list. It's called Fluor, and I'm just going to kind of show you the sort of the industry and sector. It's 38 out of 197, so pretty good there, as well as that goes. Very heavily owned by the funds. Not really a common household name, but that's one you might want to look at. You're not going to, unfortunately, right now with these stocks, you're not going to get the doubles and triples like you got in some of the the more speculative internet stocks like last year. It's probably not going to happen, but that's not to say that you can do very well in these stocks. I mean, especially if you buy them, relatively early in their move up, and that's definitely, I think, the case with some of the construction companies. So, all right. So let's see. I have my Apple stop loss at 126. I bought back the September. Yeah, good for you. So I have at least guaranteed a profit. Yeah, absolutely. Real Madrid, that's a very good buy. That's essentially what I did. I have several positions in Apple. I still really like the stock. Unfortunately, that area, the sector is out of favor. But again, it bounced back today. Good buy back on your calls. You're going to make money on that. If Apple moves up from here, you might want to consider selling another call a little bit out, because that might give you some very nice income. Apple is still a great company. It's just that it's sort of right now it tested. I want to show you the chart here, but it tested this 50-day moving average, and it looks like it's bounced off of it. So hopefully we'll get it'll move up a little bit tomorrow, and if it does, and it looks like it is, see, after hours it's up, not just slightly, but it's up, and so it's sort of handling. That's what they call this. I think if we can get beyond this 21-day moving average, then I think we're going to probably see some more upward motion. But right now it's kind of trading in a range. I'll be honest with you. What I'm really looking at, the key level on Apple is for it to move above about 132. So that's kind of where I'm seeing it move for the best there. So good for you, man. But with Astley, I'm down 15%. Ooh, geez. Well, you could. Okay. I typically, this is kind of just from years of getting washed out. I would sell it and then wait to see how it trades. I really would. With looking at this position, it's really painful to take your losses. This is why I have the 7% rule, and it's not, that's how I sleep at night. Basically, I buy the stock, I put that 7% rule in, and if I get up the next morning and it's gapped down and I'm out, well, I'm like, well, I lost some money, but I didn't lose a lot of capital. I looking at this chart for Fastly, I would strongly consider selling it, because we're seeing a lot of volume. See these red bars down here. Let me just kind of put that on there. Yeah. See how we're increasing our volume, but this is selling volume, okay? And look at how we're increasing the sales. The sales are decreasing, so this is not a good situation. We have the price falling, and we have the volume of selling increasing. So this doesn't say to me it's going to turn around, at least for right now. It looks as if it's trying to hold on to this 50-day line. This could potentially be. This has the characteristics of a head and shoulders pattern. This is the shoulder. This is the head. Oops, this is the head, and then this is the little. This is the right shoulder. This stock has a potential, based on this, of potentially having a catastrophic movement to the downside based on this the way I'm analyzing this chart. So I would be out of this one. Just and it's painful when you're down 15%. Believe me, it's painful. This is a tough market to trade, so it's just one of those things. Thank you, Samuel, for putting up home. Let's look at home and see at home group. This isn't a bad chart, and it's in a good area. Retail, here's the thing. This is another area that's doing extremely well right now. Furnishings, retail sector is doing very well. One thing I check on here is that the retail home furnishings, it's the 19th out of 197 group. So there's increasing volume of investment by funds in this particular sector of the economy. So I like this stock right off there for that. Now let's see if we can find a place to buy it. I can't really find a place to buy it. This isn't really a good pattern to buy it off of. You might be able to get it as a reversal if it reverses off of this 50-day moving average. So right now, it looks as if, this is interesting. Okay, so it's 31, and then after hours, it's already 36. Wow, something's going on here that I don't know about, but it looks as if, yeah, there's going to be some kind of gap up. Was it earnings? I'm trying to figure this out. Let's go to the weekly chart to see. There's some news on this one that I'm not seeing. Okay, it's up 41% in terms of for its first quarter. It's up. The profits are up 132, so that's excellent. The change is so we've got sales increases too. Wow, this is looking very good. This is a very good chart. I don't know. Oh, I see. Okay, I understand. This is a gap up. Yeah. I'm sorry. It took me a little bit to figure this out, Samuel. But thank you for bringing this to my attention. This is going to have this stock tomorrow. This stock tomorrow is going to gap up. Okay. This stock is going to gap up tomorrow morning. They had excellent earnings. Their earnings were up 186. So yeah, this is an example of just doing great. So Home, HOME, very good. You could probably buy this. I probably wouldn't buy this within the first 5 minutes. I'd probably wait about 30 minutes to buy this one tomorrow. But this one probably is going to gap up tomorrow. So what I'm going to do is I'm going to kind of put a banner up there so everyone can kind of see this. But I think this is, this stock most likely will gap up tomorrow morning. And again, I don't know a lot about this one, but it definitely it definitely is. This is looking kind of like it may gap up. Let's look at the 5-minute chart. I just kind of want to see. Yeah, this is right before announcement, but it's already up into after hours. They had a very good earnings. Yeah, they're 36 and they were at 31. It's up $5. So this is going to gap up tomorrow morning. So you might want to, let me put this down on my list. This one's probably going to gap up tomorrow morning. It had some very, very good earnings. I do like sometimes buying on the gap up. So this may be a gap up for Home tomorrow morning. So I may put a buy stop limit order in on this one myself. Thank you very much, Samuel. That's a great that's a really good call. I think it's going to gap up. Oh goodness, I lost my there we go. Maybe I can get it back. Let's see if I can get my camera back here. My camera's been going in and out. I just don't. There we go. Popeyes is part of QSR. Oh, okay. They own Tim. Okay, that makes sense. Okay. Well, let's see how yummy that is. QSR. Okay. I've actually been to Tim Hortons in Canada, and they're really famous in Canada, but they're pretty good. They're pretty good. Take a look at restaurant. It's called Restaurant Brands International, and I'm not that familiar with it. It's in the retail. The retail sectors have been doing well, and of course, this is a good brand. I mean, Tim Hortons and Popeyes and Burger King, they're all pretty good. It looks like they had a nice earnings per share. And restaurant groups like this are not going to be affected very much at all by the COVID thing because they've got the drive-through going on. So it does look good, I have to say. It does look good. Look at this. It's got 58% funds in it. That's good. The cash flow is strong. It's up. And everybody loves Popeyes. That's true. The only thing is it does have a little bit of a weak checklist. And the thing is, sales, I kind of want to see sales growing at a little bit faster rate than this. So that's really my only concern. I want to check this sector. This is 33 out of 197. So let's take a look at this sector. I want to see what the competitors are saying in this sector. So it's 31. Is it 31? No, 33. So it's this is 33. So this is the overall retail restaurants group sector, and let's see if we can find out where QSR's competition is. I'm going to look inside the biggest. Of course, the biggest is McDonald's, Starbucks, and Chipotle. Then Yum Brands, and there's two, and then QSR. So it's definitely in the hunt. So it's 1, 2, 3, 4, 5, 6. It's the sixth largest in the group, and that's interesting. Okay, so if we go to QSR, and then it's above Darden. So it's above Darden. Okay, that's interesting. So let's look at Starbucks. Let's compare it to Starbucks to see. Well, Starbucks was up to 66 rating. Now QSR. So Starbucks, does that come through earnings? Yeah, they're up 94% earnings. So what is QSR? QSR is still a little bit lower. 69. So let's look at SBUX. SBUX. Starbucks. Out of these groups, I think the leader, I say I think, because I'm looking at it. Comparing this group, I think you're probably better off with Starbucks rather than QSR. I think you're a little bit better off with Starbucks. It's just a little bit better chart. But let me look at QSR again to compare it. You've pulled above. You know what? I think they're both pretty good charts, and this is handled nicely above a cup entry. So, I think with these two, with Restaurants Brands International and Starbucks, I think you're better. I think Starbucks is the better of the two. So that's kind of how I see it, at least as far as the chart is concerned. So so thanks for that question, very, very much. Thoughts on the QQQ? More selling tomorrow? Probably. I want to look at the Qs here to see if they've moved. See how they've moved today. Wow, that is a good question. I'm probably, and I have a little bit of exposure to the QQQ. I think it's going to stabilize based on this. After hours price for the QQQ was 328.98. So I think it's getting a little bit of strength there. I still think, it's probably going to sell off a little bit more tomorrow. That's kind of what it's looking at, but that's a good question. Okay, TAN ETF, Palantir. We covered that. Let's look at SU. Thanks, Jeet. Appreciate the question. SU. Let's see what we're up. Suncor Energy. Yeah, I like it. Oil and gas. This is a good chart. Thanks, Jeet. This is a good chart. This is a very good chart. We have a buy point at 23.69. We're currently right below that at 22.74. So that's looking pretty decent. Earnings per share were up. It's got an upward trend. Okay, the oil and gas integrated. Here's the thing about Suncor. I would recommend, instead of Suncor, I'd probably recommend going and looking at Denbury Resources, DEN. I think it's a better bet. But I think Suncor is good. I think Denbury DEN is a better bet. But I definitely could see buying Suncor. Right now the oils are doing very, very well. So that's kind of the thing. Denbury has its properties mainly in the Gulf Coast, whereas a lot of the other ones like Matador and the other ones I was talking about earlier, they're mainly in the Permian. So interesting as well. But I definitely like Suncor. It's definitely a good bet. So let's look at TikTok here really quick. Fub, just asking which industry I can invest in. Well, here's the thing about industries, and I've been really trying to talk about this today. We're seeing a movement away from some of the areas that we got so used to doing well in, like the internet area, and there's been a lot of selling in that area, and it's basically moving into what I consider more hard asset areas. And the areas that are doing the best, believe it or not, right now, and this is just strange, but it's true. The oils are doing very well. The mining stocks, and again, I bought some Rio Tinto today, and the construction doing well. Now, if you don't want to be in those kind of super heavy industry type things, retail is doing well, and some of the restaurants are going good. We just reviewed Starbucks, and I think that's not a bad buy right now in this market. They're coming off of earnings, and it's pretty strong. So that's kind of how I see it in terms of where the money is going. This looks complex. Well, it seems this all seems very complex, but it really isn't very difficult. Really, what you have down here on the bottom, and I'll show you this. What you really have down here on the bottom, this is the volume here, and then this is the price action, and these lines here are the averages. So it's really, once you get used to it, it's not that hard to read a chart. It really isn't. It just takes a little bit of getting used to. Let's look at HP. Thanks, Ben, for this one. HP, of course, it's two companies. HP is what they used to call the HPQ, and then they spun off another one called HPE, which is the Enterprise Group. But HP is the one they've relocated to Houston, and from Palo Alto, believe it or not, and so let's take a look at HP. Just HP. I'm sorry. Oh, I'm sorry. I thought it was HPE. I apologize. Hemrick and Payne. Okay, this is drilling. I'm sorry. I got it confused with HPQ, which is HP. Now this is by the way in the techs. If you're looking to stay in the tech area, the hardware area is doing far better right now than some of the software areas, believe it or not. And HPQ, which is at $34, is looking fairly decent. So just thought I would bring that to your attention. HP, Helmick and Payne, they're a contract driller. They're kind of like Schlumberger, and they are doing okay. I don't like this group as much as the E&P group, though. I think the E&P group is better. This is a 25 over 197. It's still very good, but not as good as the actual E&P group. So let's look at that group. That's the 20. That's oil and gas drilling. Let's kind of look at the leaders in that particular group to see sort of where everything falls out. Okay, so basically this is the third best company. The company that we ought to be looking at is ChampionX, CHX. That's the company that we ought to be looking in this group. So let's look at that one. I think this is a little bit better chart. This is only 23. So here's what I would recommend on this one. Instead of HP, maybe you want to look at symbol CHX. And this is in the same industry. It's a good industry, but this one's a little bit stronger than HP, and it's right below a buy point. The buy point being at 25.69. So there you go on that. Okay, well, we're almost at the end of the hour, and just wanted to bring up. I did put out a bull put spread on. A bear put spread on Peloton, and as you probably have heard, Peloton is falling tremendously today. They had an issue with their treadmills. It looks like they're going to have to recall all of them, and so even though they may have very good earnings, this is going to be very, very bad for the company. Let's see how they closed. And again, that's the symbol PTON for Peloton. And this was a real high flyer in the COVID thing, but I think it's pulling back. Okay, it's off after hours, and it probably will be down even more tomorrow after the earnings. So we'll see what happens with Peloton. If you'd like to get on the free action trade alerts, it's super easy to do. All you have to do is go to go to www Dallas Trading Floor. Now, if you'd like to kind of take a look, I did put the Beyond Meat trade on the Veni site. It's in front of the paywall, and you can take a look at that by going to www.VennyVHINNY.com/u/Dallas Trading Floor. So until tomorrow at 2:30 Central and 3:30 Eastern, I hope everyone out there is having a good day, and hopefully we're going to recover. Yesterday was horrible, and hopefully it will return. But remember, we're still in an uptrend under pressure, so you probably want to be at least in 50% in cash. I'll see you tomorrow at 2:30 Central, 3:30 Eastern. Happy trading.